So one of the most common questions we're asked is, can you send me a list of all the expenses that I can claim for my business? Now, although we can do this for the more common and simple items, in actual fact, HMRC don't have any sort of list they publish for the expenses that you can claim for your business. This is because UK tax law has over £6,000 of tax legislation. Instead, what can and can't be claimed is based on a set of principles. Two of those principles are any cost must be wholly and exclusively for the business, and the motivation behind the expense is solely for business purpose. Now, sometimes there can be anomalies where there's mixed personal and business use. This grey area sometimes gives rise to disputes between the taxpayer and HMRC, which can then end up in tribunals before a judge. That judge will then make a decision based on the circumstances, which then sets a precedent. We can use those precedents to make decision based on your circumstances going forward. In this video, I'm going to be going through the less obvious expenses, the ones that either you didn't know existed or the ones that you didn't quite know how you go about claiming. But before I do, let's go through the most common ones. Here's a list which probably doesn't need any further explanation. They're fairly obvious. However, it is worth pointing out that the expenses that I'll be covering in this video, sometimes the treatment can vary between if you operate via self-employment or via a limited company. Let's start with number one, motor costs. So there's a simple way of claiming these, a more complicated way or a really complicated way. So you have two options generally. Either you can claim MAPs, which are mileage allowance payments, where you get 45p for the first 10,000 miles and 25p thereafter. All you need to do to claim is just keep a mileage log of your business journeys. Alternatively, you can claim the actual payments that you incur. So this is going to be things like your fuel, your insurance, your maintenance. You can claim a percentage of the cost price of the vehicle, and you have to add back any personal use that you have from the vehicle. Now, if you operate via a limited company, the rules are much more complex and there's many more scenarios to consider. In fact, I have another video which covers a lot of the scenarios there. So moving on to number two, use of home. So again, there's a simple way of claiming these and a not so simple way. So the first way is what we call flat rate method, where HMRC allow you to claim £6 per week for business use of your home. No receipts are necessary, so it is a very easy method to use. The second one is the apportionment method, where you tally up all your running costs of running the home and you apportion that by the number of rooms in the home and the time that you spend running your business from home. Now, if you run a limited company, then it may be possible to also charge a rent to your home. However, to get the tax benefits of this right, it is worth taking some advice on this. So moving on to number three, entertaining costs. Now, contrary to popular belief, sometimes this is generally not allowable for tax purposes. However, there are some exceptions. Generally, this falls into two areas: client entertaining and staff entertaining. So for clients, if you take them out and treat them to lunch or dinner or drinks or whatever, then generally that's not going to be tax deductible unless there is some sort of exchange. Now, that exchange could be something as simple as a questionnaire or a feedback survey for your services, or something where they're giving some value back to you. That cannot be entertainment because it's an exchange. The key is to retain some proof and to make sure that it's reasonable and not excessive. Secondly, staff entertaining. So you can entertain or provide benefits to your staff for up to £150 per annum as an annual event, or for smaller amounts throughout the year which do not exceed £50. Now, although entertaining is generally not tax deductible, you don't want that decision to affect the commercial benefit. So if it comes to taking out a prospect and paying for their lunch in order to win their business, then you're going to do that regardless of the tax consequence of that. Moving on to number four, meals, travel and subsistence for business travel. Now, if you're doing a business trip, then you can claim the meals, you can claim the train fares, airfares and hotel stays. It's not quite so straightforward when there's a mixture of business and personal travel. So for example, let's just say you were going to see a client for a few days and your intention was that business trip, and in between the client meetings you decide to do a bit of sightseeing or see a friend. Now, as long as you apportion those personal costs out, then the cost of the trip is fine, you can claim that. However, if the intention in the first place was to actually see your friend or do the sightseeing, and that's the reason why you booked the flights, but you happen then to be in the area and see your client, then you can't say, oh, I saw a client, so that was a business trip. The intention of your trip was for a personal nature, and therefore the whole cost is disallowed. Now, business travel doesn't include commuting, and you can't have meals eaten in place of work either. So if you are at a temporary workplace, then there are special rules if that workplace lasts more than 24 months. Number 5, clothing. So you can claim the cost of uniforms, safety clothing, costumes if you're a performer, and business branded clothing. Unfortunately, what you can't claim are suits or formal wear. Now you might think this is a bit odd because you need to wear your suit to win client business perhaps. However, there was a famous case of a barrister who took HMRC to a tribunal because she wanted to claim the cost of her pinstripe suit. The judge ruled that, although she did use it for work, she also needed the suit to keep her decent and to keep her warm, which meant there was a duality of purpose. Now, going back to the principles we mentioned earlier, if there is a duality of purpose, then HMRC does not allow the tax deduction. Number 6, bad debts. This only applies if you operate something called accruals accounting, where your invoices are included in turnover. Now, if one of those invoices has gone bad, then you can claim that back as a bad debt against your profits. The only thing is you've just got to make sure that it is unlikely to be recovered. Number 7, training and subscriptions. Now, the key here is to make sure they're directly related to trade, so it can be trade bodies, keeping up with your professional development and training to keep you up to date. What it doesn't include is training for a new skill. So if you're a plumber and you want to retrain to become an electrician, then unfortunately that is not going to be allowed. Number 8, now if you make donations, you might be able to get tax relief by something called gift aid. Best way to explain this is by an example. So let's just say you gave £800 to the charity of your choice. That charity could get that topped up by 25%, making that £800 into £1,000. In addition, if you're a high rate taxpayer, you can get £200 back from HMRC when you complete your tax return. If you operate via a company, then the company payment to the charity will attract tax relief for corporation tax, and potentially you would have saved dividend tax as well. Now, to qualify, the payments must be made towards a registered charity or a CASC, or a community amateur sports club. Moving on to number 9. Now, if your company is involved in creating new improvements or processes, then you might be able to qualify for a valuable tax relief called R&D tax credits. Now, you don't necessarily have to have people in white coats working in the background with you. It can apply to all types of companies as long as you make some sort of innovation. So businesses that we've helped in the past are a tattoo parlour who have created a new type of gun, a recruitment company created a new type of portal, and software and web developers who have created new platforms. So the tax incentive is you can get a 230% uplift of any costs that you incur in R&D development. And if you're a loss-making company, you can actually get a cash back from HMRC. The key is, though, this only applies to limited companies. So unfortunately, if you're a self-employed sole trader, this won't apply to you. Number 10, pensions. Now, as well as building up your retirement pot, pensions can be a great way to save tax. Best way to demonstrate is by an example. So again, let's take a sole trader who makes an £8,000 payment to his pension. The pension company will actually get that uplifted by 25%, so that £8,000 will turn into £10,000. Now, if he's a high rate taxpayer, he can also claim back £2,000 from HMRC. He can do this via his self-assessment tax return. For a company, any contribution they make, they will get corporation tax relief on. Now, because pension contributions are quite a valuable tax relief, there is limits each year that you can actually contribute towards your pensions. So it's worth bearing this in mind. Now we come to the final one, number 11, which is actually a bit of a bonus one, but it's more about tax efficient investments rather than a business expense. And this works really well if you've got excess profits in your company that you don't need on an immediate basis. The way this works is if you invest in particular shares that have particular statuses, which is the EIS or SEIS status, then you can get tax relief at 30 or 50%. So for example, a £10,000 investment would give you £3,000 or £5,000 back from your overall tax bill. Also, those shares won't carry any capital gains tax. And in addition, if you recently disposed of an asset like a buy-to-let property, for example, and got hit with capital gains tax, then you can actually mitigate some of that tax against this investment. So very valuable in itself. As with all investments, it is worth seeking investment advice before you go ahead. If you found this video useful, then you might also be interested in our Taxability Checklist. It's 70 tax planning strategies covering business, personal, capital gains and inheritance tax, all in a checklist format. To get your free copy, all you have to do is click on the link below.